Hi guys, during this video I'd like to show you how we use the spreadsheet for our mastermind group. So initially when I prepare my trades, I go through the list of companies which I already have for long term, because there is another list which is for short trading, right? So those companies are mostly good quality companies, not all of them, but majority of them are. And also I include here indexes for major economies like US indexes, Russian indexes, Chinese indexes. Right, so first what I do, I quickly go and analyze company technically, and I don't do it that often, maybe once a week, sometimes twice a week, and it depends on how many companies I find during that research. So every time when I go through that list, I just going through technicals and see, for example, we can see that at the moment it's at resistance, it's bouncing back, so it's definitely, it looks like going to go down, right? When I find a potentially good trade, for example, like this company ADS, Alliance Data Systems, so I can see that it bounced from support from around $62.50, and we can see for the couple of days it's moving up, and indicators are looking good as well, and I can predict that it might be going somewhere to around previous resistance, maybe not that high, but around maybe $63, something like that. Okay, so that would be the movement spread from the current price of $68 to around $73. What I do, I recorded my table, so I put the current price 67.65 and around 73.50. It gives me instantly the potential profitability $5.85 and calculates the profitability in percentage as well. So it gives me about 8.6%. Now what I want to say that it's not a definite trade. After that I'm going to do further research as well. So, and as I can see, by going through the my watch list, I start putting first of all the date, so today's date, and then I can see the companies, and I put in more and more companies like that. Now after that it's easier to just to sort them out. What I do, I delete the blanks, and there are only companies left which are potential trades for today or for this week. Quite often I have something like that. As we can see, LCII, I don't have exact entry point and exit point. So also I don't have exact entry point for GT and exit point, and for some other companies. And the main reason is that the company might be still falling down, or maybe the entry point is not precise. So I have to keep watching that. Same as PayPal, for example, it's still keeping falling. It's started slightly moving up, but it's not definite entry point. So that's what I do. This is the first thing. So in majority of cases, most of the time, I don't have entry points. Now secondly, what I do, I start going and evaluating these companies in more details. And when I like the entry point, for example, if we go for SBA, we can see that it looks pretty attractive technically. It was going down, then it broke down the downtrend. We can see this is already a sideways trend, and it's done two waves, practically three waves, 1, 2, 3, and we started moving up. So most likely, it's not necessarily, but quite possible that it's going to continue to the same level. So, and we might see the movement from the current price of $70.23 to around $18.80. So it is a quite possible move. So what I do after that, I put in yellow, so it is quite possible trade. So when I after that evaluate my spreadsheet, and I can see that out of how many companies, probably 20 companies here in the list, I have 1, 2, 3, 4, 5, 6, 6 of them here in yellow. It means that these are quite possible trades out of those 20. Now why I do this color kind of coloring, because there are other people who looking at this same spreadsheet, and when you see that it is today's date and you can see there are quite few companies, you still have to evaluate them. You don't go blindly trade whatever numbers are here. So, but then when you see yellow, so it means that these companies, at least in my case, or the people who in this mastermind group, they are more precisely watching these specific companies and they're thinking of placing the trade on that particular situation, right? So, and this is the spread of movement. Maybe they trade options, but that's where you see entry and exit levels for the stock movement itself, right? And here you can see the profitability, potential profitability for this trade. The next stage, what I do, I try to look fundamentally what is happening with these companies, because some of them might get into this list and I haven't analyzed them for quite a while, maybe a few months, and definitely I go and read what is happening with this company right now. So the main reason why the company fell in price, why it's at the moment at support, and why it is undervalued currently, because in some cases that would be very serious issue, and definitely after that I disregard that company, change the color scheme, or maybe even delete it from that list. Now if the company still remains a pretty good one and still fundamentally sound, so the next evaluation for me is to look at possible trading strategies. For this purpose, I go to other websites, and quite often I go to CBOE. I can go to Interactive Broker as well, but Interactive Broker very often closed during the day. You can see the option chain. So what I do and I evaluate. For example, this company Merck, right? So and I can see a current price $76. So what if I sell put? So if I sell put, I can get last trade was 85 cents, so between 80 cents and 94 cents. I might get 90 cents, maybe even more if the company during the trading session moves down a bit. So I can sell at a higher price, but definitely what I can see already, so if the current price is $76, a bit higher, right, and I sell 76, so at the money sell put, I am getting about 1.2%, maybe 1.1, 1.2%, depends on the premium I receive, for 1 week. Okay, so today is Monday, and if I sell it until Friday, so for 1 week I'm getting 1.2%. So if you multiply it by 52 weeks, if you constantly do that, so it might give you around 52% profitability on your trade if you constantly write. I mean, if you sell the put 60 cents, 67 strike, and the share price moves up, so you collect all the premium. Okay, that would be one option. You can go for 2 weeks. In this case, we can see that I might get last trade was 128 and the spread is between 117 to 144. So again, if the share price moves during the day, and usually it does, so you might get a bit more. So for example, 135. So that's what I can get. So that would be already close to 2%, a bit less, maybe 1.8% for the 2 weeks period. Okay, now usually I don't hold the position all the way, so all 2 weeks. I might close it much earlier, maybe it's same day or maybe next day. So I'll show you how I do it, but that's what I evaluate. Another alternative I can do and look for buy and call options. So in this case I go usually for January. So if I go for January 2023, so it's practically 9 months, 10 months from now, and that's what I can see. If I look at out the money call option, for example, with a strike price of $80, you can see that I have to pay $4.80. So it's roughly 5%, a bit more than 5, maybe 6% from the current price, right? So, or from the premium. So also what I can see, the delta at the moment is 0.43. And I understand when the share price start moving up, it's going to become 50 and then 56 and then 60. Okay, so it's going to change based on the movement which the share going to do in the future. And if I go to Merck, for example, technical analysis platform, I can see that the current price is $76.32 and the approximate movement range to roughly $82. It can go higher, of course. it can go lower around maybe $79, but also it can go to $82. So because we can see there are a few levels here. Now if I estimate that the company is going to go to $82, so it's about $6 move. When I look at delta and average it down to 0.5, so I presume that it's going to roughly move around $3 at least, right? So half of what the share price movement. Share price is moving for $6. The option premium is going to move at least for $3, right? In this particular case, it might be more, but like I assess it in this way. So what I do, I add 4.8 plus 3. And I record it in the table. So as you can see that for Merck, what we've done this kind of evaluation on different trades. And I put, first of all, I can buy shares and sell shares. So we can see it here. So 76.30 and sell at $82. Another alternative, I sell put. As you can see, it's for 2 weeks. I sell it at $1.35 and then buy it back at 25 cents. Or third alternative trade, I can do $4.80 to buy and $7.90 to sell, $3.10 extra. I added not $3 exactly, but $3.10. Now then, because it's clearly easily to understand trading for shares, but then you are not always fully understand if you're looking at this table and you are not the person who put in this trade, so you don't know what the strike price, you don't know what the duration of this trade, right? So here I put some comments. So buy to open January 23, right? So it's next January. $80 call. Okay, so we can see that that's what I'm paying for. All right, and then if I sell that part of the put, so I put sell to open March 22 11th, right? So the date is 11/76 put. So the person who is looking at this table understands what is happening right now in this particular trade. And if the person wants to repeat this trade, they can evaluate it. I never recommend just blindly follow the trade, but I want you to evaluate this trade, look at the company, and if you like the business and if you're happy to hold this company for a long period of time and you believe that that might be the trade which you want to put in your trading account, so you can do that. All right. So also, if you believe that you have a company which you found and it's fantastic, what you need to do, you just open add blanks again and then add your company somewhere at the bottom of the list. Don't bother to put it at the same table, so just put it at the bottom, add whatever company you have, put your name here. Okay, that we know that it is you, and then you can do exactly the same thing. After that, you just need to, would say, sort it from A to Z, and all the companies are going to be by alphabetical order. When I evaluating the trade, I usually take into account several things. So first of all, it's fundamentals of the company. So if I like the company, that's good. So it has to be quality company. Sometimes I do trades with companies which are going through transition, so I wouldn't call them quality company, but in majority of cases I trade them because they are quite undervalued and they have a potential to go up quite a lot. So this is the second thing, right? Fundamentally, I assess the valuation of the company and I trade companies which are undervalued. I don't place trades with companies which are overvalued. Sometimes I do trades with companies with fair value, which, for example, really seldom go in undervalued situation. So, for example, if we go for a company like Walmart, it's practically never undervalued. So, because the company is so solid, so huge, so big, that in majority of these cases it's overvalued or fair value. So, and I try to trade it when it is fair value. So second thing which I evaluate is always the type of protection I can use. So if the company has option strategies or not, because even if you are right about the company and you see the potential in this company, but if the company is going down, and it might happen because of different situation in the market. So what are you going to do? Are you going just to sit there and wait until the company recovers, or you're going to do something about that? And if you know how to trade options, so basically you can start selling covered calls or do something about that, right? So, and in this case, I prefer that the company had options right? So for example, if we go for some of the companies are listed here, so for example, Solid Beauty, SBH, they have pretty bad option premium. So if it goes down, you're practically stuck with this company because the option premium is very low, and spread between strike prices are quite big, so it wouldn't be a good company to trade options. Whereas if you do with Merck, pretty interesting because it can have sometimes 50 cents spread between strike prices. It has weekly options, good volume. So definitely, even if the company goes down, I still be able to sell covered calls and collect some premiums while the company is at the bottom, let's say, right? And also it is good solid company, currently undervalued. So for example, at the moment what I'm doing, I'm thinking of placing the trade for Merck. And if I place the trade, so when I place the trade on my account, I color it in green. So, and I specifically show what I do. So in this particular case, I placed it already in my account, and as you can see, it's 28th of February, and I sold one put, right? So for this, I didn't put how many contracts I sold, but for example, you can see that one trade is selling put options and buying it back instantly. So if the share price moves up, so actually I might buy this put option back in 2-3 days, right? So I wouldn't be holding it until the Friday week from now. So same story with the call option. Okay, I can see the buy and sell. I'm not going to wait until expiration and then buy shares and sell the shares. No, I'm going to sell it. So as soon as the company reaches the level where the option premium is going to be $7.9, it's going to be sold, and I fix the profit. Will I change it? Quite possible. So if I see some changes in the future, so if 2 weeks from now, a week from now, I can see that the company is not going to go to $82, and most likely it's not going to reach $7.2 in option premium. Maybe it's going to stack about, say, $79, so, and the option premium is going to be around $6. I'm still going to sell it because I will fix like close to maybe 40% in profit, whereas here it's around 80% of profitability. This is how, guys, I use this table. And sometimes you will see quite a lot of companies right now because the market is crazy, right, based on what is happening in Europe right now. And sometimes you can see only a couple companies here, so it wouldn't be that much. So just if you want to participate in that, what you do, you watch for this. Then you can type in our chat what you like. If you discover something and you see that somebody is placing trade and you found something bad about this company, so don't be silent. Notify your fellows investors and let them know that, look guys, probably you missed that this company has certain troubles or issues, and maybe we overlooked it, right? So, and you might help us to avoid the future problems and future losses. So definitely put it in our chat, and everyone will appreciate it. So guys, thank you very much for watching this video. Hopefully this table will help you to make some money, and if you are able to contribute to that, I'm sure that other investors will be very glad for that. Okay, thank you, bye.